Okay, let's talk about the rise of retail traders during the pandemic. Robert Frank's been tracking stock market wealth, and he joins us now. Hey, Robert.
Good morning, Joe. Millions of new investors opened trading accounts during the pandemic. Robinhood alone added over 10 million accounts, now at over 22 million. But stock market wealth has not become more democratized. In fact, it's become more concentrated. According to the latest Fed data, the top 1% now owns 54% of all stocks. The top 10% owns 90%. Both are at all-time records. There are three main reasons for these higher concentrations. First of all, the new retail investors, they're large in number but small in account size. The average Robinhood account now at about $4,000, smaller, although younger than those at, say, Vanguard or Schwab. And new investors also bought at higher prices, so their upside may not have been as large, and they are more likely to trade rather than buy or hold, especially these volatile stocks. So their returns have been a little bit lower. The top 1% had stock gains of over 43% over the past year. That compares with about 33% return for the bottom 90% of investors. Guys, so these guys are doing well. We're happy they're in the market. We'd like to see this wealth more broadly distributed.
Right. But then again, there's another example of rising asset values. I guess we already know that. They benefit people who have assets. So is that good or bad? It's good.
Look, the stock market is the greatest wealth creation machine in the world. It's great that it's now more broadly owned. We want the spoils of that market to be widely distributed. And that's why, we want these investors to be in the market. We want them to stay in, and we want them to invest rather than trade over the long term.
Housing, you want people to own houses, but then you see what happens when you try and make it too easy to own houses. We've dealt with that, but it's the upper, who owns houses? I don't know what percentage, but when housing goes up, that seems to benefit the wealthy. Anything that goes up is what you want because it's also a reflection of the underlying economy. Usually, there's a reason why things are like the stock market go up. So it's really, we're in a weird place.
Yeah. Shepard Smith here. Thanks for watching CNBC on YouTube.